Hey guys, this is Reese Turner from the Vanguard team at Manor Realty. Today I have somebody on here that I've known forever. She is one of Windsor, Ontario's top mortgage brokers. Kelly Persa, thank you for joining us.
Hi, Reese.
And Kelly, what company are you with, just for the record?
Yeah, I'm with Equity Plus Mortgages here in Windsor. We're just located off of Manning Road.
And how long have you been tolerating real estate agents like me?
Well, I have actually been in the financial services industry since '87. Long time.
Oh, jeez. Yeah.
That's why I've known you for a while.
Yeah, you had to wait for me to get past grade 7 to become an actual
Yeah,
client
yeah.
and referral source. Yeah. So Kelly and I, so Kelly's also a fellow real estate investor, guys, her and her husband. And she really knows the mortgages as a result because she's one of us, right? Just like you want a real estate agent that owns income properties, if you're an investor, same thing with your mortgage broker. Call me crazy, right? So Kelly's one of those go-tos that we love. Sadie Morrow on our team and Kelly work quite a bit together now, and she's tolerated Steve Deruge in the past
He's a great
on
guy.
the team. Oh, I
They're
gotta
both
chirp
great.
him.
They're
I
both.
gotta chirp him. So, guys, the reason we're here today is um, Kelly's doing something amazing. Actually, I'm going to start this over. I have to start with that. I am so sorry. Yeah, let me start it over
Yeah.
because you want to start with the problem or people. You know what? I could even edit. I'll edit it to the beginning. That's okay. I'm
Okay.
just going to keep going. I'm going to cut this
Great.
out. Yeah.
Yeah, yeah.
Um, so it's interesting because I've known Kelly for almost the entire 20 years I've been in the business. And when you know somebody in the business for 20 years, you don't think that they're suddenly going to teach you something that sort of blows your mind with mortgages and you haven't really considered before. I think a lot of you have probably heard of the Smith maneuver, which essentially is when you take sort of like, I'm going to be gauche about this because
Mhm.
this is my forte, Kelly, but you're taking money from your homeowner's line of credit and you're buying other stuff with it, right? I mean, Smith maneuver. Yeah. Okay. This is not Smith maneuver. So don't be a know-it-all at home going, oh, I'm going to switch videos now. I already know this stuff. You don't, because I've never heard of this before.
Mhm.
What is the official term of this, Kelly, that you do?
Well, what I'm looking at is using your rental property
Yeah.
and your primary residence, and you want to do a conversion process using your rental income and your primary residence. And you want to turn your primary residence, which is not tax deductible, into a actual tax deduction mortgage for you. So that's kind of
Tax
new.
deduction mortgage. So
Yes.
this is going to be a mortgage that you use for whatever for investment, but at the same time you can write off your mortgage. You're on your house.
Right. Yes, which we've
Okay.
never, a lot of us have never thought about that. I mean, ourselves, we did. We had used our primary residence home equity line and used the home equity line to put the down payments on all of our rentals. So that worked lovely. But now I've discovered in the last 5 years a new way to do this, which is even better to convert that primary residence mortgage into a totally tax deductible mortgage in 5 years or less. It is.
So this is your invention.
No, no, no. I am
Oh,
not going to take credit for this. No, it is part.
okay,
It
fair.
it falls under Smith maneuver for sure. It's
Okay,
one of their strategies. They have a lot of strategies, but this one is
got it.
amazing with rentals.
By the way, guys, Smith Maneuver is Canadian, which I didn't realize. I thought all these
Mhm.
things were all American, but
No.
it's a Canadian thing, Smith Maneuver. Yeah. Okay, so this is a variant of the Smith Maneuver that allows us to leverage our home mortgage
Mhm.
to, our home equity, basically to invest,
Mhm.
number one. But number two, it's done in such a way that we're able to write off the interest on our home mortgage. Is that right?
There's different strategies that will work with that, but this one is we're going to focus on using your rental income to convert your mortgage into a deductible mortgage, tax deductible mortgage. So we're using the
Got it.
rental income.
Got it. Can you, so you've got a PowerPoint presentation,
Yeah,
you kind
I
of,
do. Yeah, if I can
I'm going
just,
to ask you lots of questions during it. Feel free
that's
to skip,
okay. Let me just pull.
skip all the, yeah, like we don't have a ton of time, right? So skip all the
Yeah,
junk and let's get to
let me
the
get
meat and
into,
potatoes.
let's go to, we're using readvancing mortgages. So what a readvancing mortgage is, your typical mortgage, you pay principal and interest. A readvancing mortgage, with every principal repayment you put down, your line of credit limit goes up by the exact same amount. So let's use a mortgage payment of $800.
Hold on,
Yeah,
because so you're talking at a 10 out of 10 expert level.
true.
I mean, we're all, this is new to us, like keeping
Yes.
it. So if you could repeat that again. So you're taking,
Yes. So we're taking so instead of having your regular standard mortgage, principal and interest. So
yeah,
we have on this readvancing mortgage, you have a readvancing mortgage. You might have a non-readvancing mortgage on it, and you have a home equity line. So let's use $800 a month is your mortgage payment. 300 is
okay.
going to principal, $500 is going to interest. So that $300 that's going to principal every single month, that increases your line of credit limit the exact same amount. So you're always continuing to borrow that 80%. You can keep borrowing that at all times.
Okay, so you got your income property, the cash flow's spitting out
Mm-hmm.
$800 a month on the
Yes,
income property.
correct.
And you're taking that $800 and you are
So
paying
for
down.
mhm.
Hmm?
Yeah, so with that, that's when we want to use our rental income. So we're focusing on converting
No,
non-deductible.
but yeah, let me finish because I want to make sure
Oh,
everybody
okay.
understands at home.
Sure.
I've got a duplex in Little Italy in
Mm-hmm.
Windsor. I'm making $800 a month after all my bills are paid on 123 Giovanni Bocce Avenue. That was not a cliche at all. I'm in Little Italy. Yeah. Oh, I'm gonna use it. So I'm at 123 Giovanni Bocce Lane. I
Mm-hmm.
got a duplex. It's spitting out $800 cash flow a month after everything's paid. You are then taking that $800 and you're paying down your homeowner's line of credit by the 800.
Nope. Nope.
Okay.
So let's go back. So first of all, it's important to understand what a readvancing mortgage is. So again, let's just think of, first of all, we'll start with the payment, your regular mortgage payment on your primary residence. So the principal that is paid down every month increases your line of credit limit, which can be borrowed, personal or business use, rentals, investments, non-registered,
On my house.
on your
You're
primary
talking about my
residence.
house right now.
Yes, your primary residence.
Okay, so primary residence. Okay, so again, like just call it a house because
Yep.
like we got tons of people
Oh,
like
okay.
watching this right
Yeah.
now. English isn't their first language, and it's a
Yeah.
house. So we've got our house,
Your house.
and we're paying down on the house instead of like a traditional mortgage. We've got a homeowner's line of credit. Is that
No,
correct?
we have a traditional mortgage and
Traditional mortgage. Okay.
a home equity line of credit. But that traditional mortgage has got a little twist to it. It's got this component that every time you make a payment on it, whether it's your regular monthly mortgage payment or whether you're dropping a prepayment. So that's that lump sum payment that you hear about. If you're
Mm-hmm.
dropping one of that increases that line of credit. So if you took, say, your rental income of gross rental income, not net, we're taking our gross. So if you got $3,600 a month in gross rental income,
Sure.
before taking any deductions, you take that whole amount of rental income and you make a prepayment on your primary residence, your house. You're putting that whole income onto that house. That
Now I
$3,600,
get it. I got it.
got it?
I
Okay, so
got it.
then good.
Okay.
That's good. So the
Good.
$3,600, now you've made a prepayment on that mortgage. So your mortgage, your regular mortgage
Okay.
is now shrunk. Now your line of credit increases that exact same amount,
Yep.
$3,600. So your line of credit has $3,600 limit in there. Now you go in and you take that $3,600 out and you put it into your rental operating account. When you remove it from the line of credit, it automatically becomes a debt.
A
It
write off.
automatically becomes interest owing. It automatically
Okay.
becomes tax deductible.
Okay, so everybody watching this, we got Kelly down to a 5 out of 10 level. We got her down from the expert level, and all of a sudden, my
Sorry.
Neanderthal brain kicked in and got it. So, guys, all she's talking about is recycling the money in a circle.
Yes,
That's
exactly.
what this is. I'm learning too, guys. I told
Yeah,
you this
yeah.
is new to me. This
Yes.
I don't know everything about everything.
Yes.
I just fake it till I make it. Um, so what you're doing, guys, is you've got your duplex on Giovanni Avenue. And for the Italians watching this, I know you guys have got great sense of humor. Come on, like I'm just joking around here. So you've got your house in Little Italy, your duplex,
Hmm.
and it's spitting out $800 a month. Oh, sorry. In gross rent
Gross.
before your expenses, it's spitting out 3,600.
Correct.
Right. So instead of keeping everything in that same bank account for that duplex and paying off all your
Hmm.
expenses in that duplex from the 3,600 and leaving $800 in that bank account, you're saying, hey, no, don't do that. Take that 3,600 gross, bring it all the way over to your house that you own,
Yes.
and pay down this specialized, semi-specialized mortgage.
Hmm.
That when you pay down your mortgage by 3,600 in principal, all of a sudden your homeowner's line of credit on the same house that you own and live in,
Yes.
all of a sudden your line of credit availability goes up 3,600.
Right.
Well, you got a problem. You still got to pay about $1,800. No, $2,800 in expenses back on your duplex. No
Hmm.
problem. You pay that 2,800 out of your homeowner's line of credit.
I would take the whole
Back.
thing out. I would move the whole 3,600 out.
Okay, so
Yeah.
let's follow the money then. So 3,600 is your gross rent.
Hmm.
Goes to pay down your homeowner your house mortgage instead of all the expenses on your duplex. So
Right.
instead of doing it the normal way, you
Hmm.
bring it over to your house, pay down your house mortgage. That makes you pay down your house mortgage 3,600, your gross rent.
Right.
You pay that automatically jacks up your homeowner's line of credit by 3,600. You
Hmm.
move the 3,600 back to
Rental operating
the
account.
to the operating account on your duplex. So
Hmm.
to your duplex, nothing's really changed.
Hmm.
But in the meantime, because you cycled the money through your house, now your house mortgage
Is
is a
becoming
tax write
deductible.
off on the homeowner's line of credit because of what
Yeah.
you're using that money for.
Exactly.
Wow.
Exactly. So, and if you think
Wow.
about it, prepayment is 20% on this specialized product. So, and your mortgage is already continuing to pay down every month. So, in less than 5 years, you can totally convert this. 5 years, you can
Converted. What do you mean?
totally. So, if you're using your rental income every month, and if your rental income is above, if you take the annual and you look at that compared to the 20% prepay allowed on your house, on your primary residence.
You're losing me again. I'm sorry.
So most prepayments on mortgages. So
Yeah.
everyone is allowed to pay 10, 15, 20%. This product allows 20%.
Oh, I understand. Every year, guys, you can pay an
Yeah,
extra 10% principal against the balance of your mortgage. You can't do more than that because
right,
the bank wants to make their money off of
right.
your an interest on your, yeah. Okay.
So if you
Got
do
it.
20% and you do that every year for 5 years, in 5 years, your entire house, your primary residence, is actually deductible because you've converted it all into the line of credit and
Right.
you're
Right.
using it for rental. You still have your line of credit owing and it's deductible. All the interest on that is now deductible against your rental income, which
Yeah.
bigger tax deductions equals lower taxes, which equals hopefully more in your pocket.
Yeah.
So five
Wow.
years you can fully convert. I was just when I heard this, I was like, I wish I had known this when I started my rentals 20 years ago. Didn't know this. I was just like, this is crazy.
Well, yeah, and the thing that's happening down here as we do this interview is that we're now able to rent out these income properties for excessively high rents because of
Yes.
all the temporary tradespeople, executives, and supervisors that are coming to Windsor to build the $6.4 billion international bridge, the $3 billion mega hospital, the $1.5 billion in freeways, and all of the factories, right?
Mm. Yeah,
And these aren't
absolutely.
little 10,000 square foot factories, guys. These are factory. You you can't, your brain cannot appreciate the size of these factories they're building without seeing it with your own eyes, and you just go, holy, that's just one fact. That's just one plant.
And we got to house
Like,
these people. We need to house
well,
these
and I mean,
people.
the announcement today as we record this was we're now getting the Dodge Charger
Yes, yep.
as another product that we're going to be assembling in Windsor for the next 10, 15 years. Like, okay, guys, I mean, yeah, you can go and buy a rental property in I don't know. I don't want to insult any towns, but the cash flows that you can do here now are insane. And now think about, you're getting all these cash flows. Like if I've got a duplex right now and they're 2 bedrooms each, my cash flow right now renting to those workers is about $6,000 a month, $3,000 per unit. It's insane.
Mm-hmm.
And what Kelly's saying is you can put that 6,000 through your house if the mortgages and the homeowner's line of credit are structured properly. You can do that every month. So you're converting $72,000 a year of your mortgage into a homeowner's line of credit.
Mm-hmm.
And guys, over time, that becomes a lot of your bread and butter to continue to cycle money to buy more and more income properties and to get more wealthy through real estate investment.
Yeah, and you can leave it there. There's so much you can do with this product because it allows up to 5 mortgages running at one time. And it's got the only true port that I can find on the market. Everybody says, oh, you can port your mortgage, but you got to port it the same amount. Oh, you got to put your mortgage and do a blend and increase. This one, I just want to tell you this because this is so amazing. Because if these people are, if your database is like, okay, well, what happens if I move? I had 2 clients upsize this year and their mortgages were at 1.89 and 2.3. Well, they're moving to bigger properties. They need bigger mortgages because it allows 5 mortgages. I truly ported the two mortgages as they were, 189 and 2.3. And then I add on that additional mortgage, which nobody else lets you do this. So I was able to add the increase. So the bulk of their mortgage is still sitting at 1.89 and 2.3. And we just did a tiny increases at today's rates. You can't find that anywhere either. So it is
through a specific lender or?
Yep.
Okay.
It is. It's a specialized
And if you're going to want
product.
that specific lender, guys, you're not going to get that secret sauce on this interview. That is
Nope.
sort of knowledge is power, right? No, don't. That is a Canadian apology. You don't apologize for that. Look, we get paid on knowledge, right? I mean, what you guys see from us on these videos is the tip of the iceberg. Like we know way more than what we're explaining in a 15-minute interview, right? So this is just the surface. If you want to know more, Kelly's contact information is going to be below this video, right? Our contact information is below this video. So if you lose Kelly specifically, send us a message. Our landing page is there, guys. Our Facebook investment group is there. If you want access to those exclusive listings and pre-MLS listings, and then do this with Kelly, you got the roadmap. You now know the people. Everything's laid out. Give us a shout. I think our landing page is on there too if you want to talk to us. Again, Sadie Morrow's working heavily with Kelly. So if you're familiar with Sadie, she's available to you too through the team. Kelly, thank you for joining us today.
Yeah, thanks for having me. Hope I didn't confuse you too much.
Well, I hope I was
product. It's a great product, trust me.
Yeah, well, because of the lack of time too, I was probably quite brief and blunt, but I mean, it was just to make sure that we're talking at a level that everybody understands.
Yes, for sure.
Yeah.
I mean, I could.
Yeah, so quit being so smart, all right? Quit showing off.
If you want, if you want to attach that presentation to your link, I don't really care. Like,
that's not a bad idea. Yeah. Okay, guys, we'll link the PowerPoint presentation that we didn't use today as well.
Yeah, that sounds good.
All right, Kelly, thank you for joining us. Really appreciate it.
Thank you. You take care.
Okay.
Bye.